Why 5 nations are dumping U.S. debt. The short version. Something is happening that almost no one wants to talk about. 5 major countries, China, Japan, Saudi Arabia, Brazil, and India, have collectively sold over $400 billion in U.S. Treasury bonds in just 18 months. And they're not slowing down. The 5 players China has slashed its Treasury holdings from $1.3 trillion to $759 billion over 12 years. And the pace is accelerating. They're not just selling, they're buying gold aggressively and building an entirely parallel financial system. This is an exit strategy, not portfolio trimming. Japan, America's closest ally, sold $119 billion in a single quarter. Not out of hostility, but because Japanese bonds finally pay competitive returns again. When your most loyal creditor leaves for purely economic reasons, that's a structural problem. Saudi Arabia is doing something bigger, quietly dismantling the petrodollar. They let their exclusive oil for dollars agreement expire in 2024. Now they accept yuan, euros, rupees. A $50 billion energy deal with China settled in yuan. $50 billion that used to require dollars. Doesn't anymore. Brazil and India are smaller sellers, but the signal is loud. These are friendly democracies, not rivals. When even allies quietly reduce exposure to your debt, it means they don't trust your fiscal trajectory. Why now? $36 trillion in national debt, growing at 6% annually, while the economy grows at 2%. $1.4 trillion in annual interest payments, and rising. Geopolitical risk. They watch the West freeze Russia's reserves overnight. Dollar alternatives are finally real. BRICS payment systems, currency swaps, digital currencies, unpredictable U.S. trade policy making America a less reliable partner, the cascade nobody wants to admit. When major holders sell bonds, prices drop, yields rise. Borrowing costs climb, the deficit expands. More bonds flood the market. Less demand meets more supply. Yields rise further. Repeat. At 7% yields on $36 trillion in debt, interest payments alone would hit $2.5 trillion, more than half of all U.S. tax revenue. At that point, the choices are default, print money, and trigger hyperinflation, or cut spending so hard you cause a depression. None of those are good options. What it means for ordinary people: higher mortgage rates, inflation returning, stock market losses wiping out retirement savings, unemployment spiking, government services gutted. The pattern is identical to every debt crisis in history: Argentina, Greece, Lebanon, just at a scale the world has never seen before. The 5 nations selling aren't panicking, they're preparing. The question is whether you are.